Good afternoon, and welcome to a brand new trading week. My name is Sing Yao, and I will be covering for Tillen today. As a recap, last week was an especially patchy week for most of the US companies that posted earnings, and this, of course, affected ASEAN markets. Aside from Tesla, Philip Morris, ServiceNow, the shares of the 13 of the largest companies that reported ended in the red. These included Coca-Cola, IBM, GE Aerospace, Honeywell, Lockheed, and Boston Scientific. The problem? Earnings growth is, as we believe, falling short of expectations so far. And the general view is that US consumers have shifted their spending more towards services than goods. That is, however, very good news for the tech sector, as we believe, because this is going to be a very big week for tech earnings. Alphabet releases on Tuesday, Microsoft Meta on Wednesday, and Amazon and Apple on Thursday. And we'll, of course, also get the jobs report on Friday as well. So not to mention also is that this is the penultimate week before US elections next Tuesday. Kamala Harris and Donald Trump, as we all know, are both locked in a dead heat, but markets are betting that a rate sweep and Trump tax cuts will drive US stocks to record highs. And this is probably the effects that we're seeing in the stock markets at this moment. So to help plan a strategy around these events, we will first look at bond yields before we talk about stocks, because to some extent, there is quite a bit of relationship between a rising yield curve and lower stock prices. Sometimes these relationships do not hold, but in this instance, it seems like it does. At this critical juncture, the 10-year US Treasuries have been rising of late despite expectations the Federal Reserve will continue to cut rates. So I'd like to invite our first guest to the show. Winston is our head of credit research at Maybank, to first talk us through in terms of what his views are about the US rate curve. Winston, hi, welcome to the show, and good afternoon to you.
Afternoon,
Winston,
Yao.
hi. Let me first ask you about this broad trends that we're seeing at this moment. Are the coming months' non-farm payroll prints going to look strong in your opinion? Because there's a fair bit of relationship between the strength of the non-farm payrolls and how the yield curve is behaving at this moment. Vincent?
Yeah, the bond sell-off in treasuries has been a bit steep over the past few weeks. After the 10-year hitting a low of 360, sometime in September, especially going into and shortly after the last FOMC meeting when the Fed cut 50 bips. The 10-year yield bottomed at about 360 and have since risen by almost 60, 70 bips. And this morning is about 425, 427. I think the sell-off was due to a combination of factors. One is data resilience, and second is going into the US elections. Data resilience because I know in June, July, and August, going into the FOMC meeting in September, the job market actually has started to weaken. And to the extent that based on the household survey, the unemployment rate increased to a level where the SAM rule was triggered. And just a quick recap, SAM rule is kind of like an incidental indicator for recession, and had correctly pointed out US economy entered recession for the past few decades. So there was quite a lot of concern in the market that time. But since then, data has turned out to be a lot more resilient. That's why the curve will price higher. And US election, as we know, there's a lot of uncertainty, even not just between who is going to win, whether which party will control the Congress, and also the policy, election promises and delivery, whether they're going to be the same. So a lot of uncertainty, and naturally, the higher the probability of a Trump win, the slightly more bearish for the market.
Okay, all right. So as the media is basically reporting at this moment, if Trump takes over the administration, basically he will raise tariffs by 60% on China and 10% on the rest of the world. How much do you think the CPI will likely um, rise by in this scenario then?
Okay, the proposed tariff, I would say, very drastic. 60% on China and 10-20% on the rest of the world. And China's share of US imports has already declined because of the previous rounds of tariff. As a share of US imports, China actually at one point accounted to more than 20% back in 2017, but it has now dropped to probably about 15, 16, or 17%. The last was like 17% in 2022. Lah. The latest one is probably going to be lower. Certainly, if the tariffs are being imposed immediately, let's say once Trump came to the office, that will result certainly in higher goods inflation and also the overall inflation. Although we have to say that the extent of the impact will actually depend on the timeline, the mechanism of implementation, and also the actual tariff being imposed. But one thing I would like to point out is even though the supply side impact intuitively it should be higher inflations, but tariff, especially significant tariff across the board, could actually create shocks to the economy, to the GDP and global trade activity. There might also be retaliations, and not just from China and perhaps other countries. The trade relationship with trade partners could worsen, which can actually limit the price increase. There might be some offset to price increase if these shocks start to drag down on demand and create this inflationary impact on prices.
Right. Okay. So it does sound like there's still a fair bit of uncertainty at this moment. And if I read you correctly, what the capital markets are implying at this moment in terms of be it the 2-year or the 10-year US Treasury yields versus the inflation expectations that are about to hit the world, not just US, but the world, that I mean, the direction is basically going up in that sense. You know, and I guess my question here is, in light of this scenario, would it then be better to play the uh, U.S. credit markets, or do you think ASEAN rates still, bonds are still have some room to correct in that sense?
I think in the near term, there probably is still some room to correct between now and going into the elections on the 5th of November. And also this Friday, there will be non-farm payroll. Consensus is guiding for sharp decelerations because of weather-related factors, because of the strikes by Boeing workers accounting for like, I think more than 30,000. So the payroll number may not look good. The I think the challenge is there's a lot of uncertainty, and knowing this, we actually reduce our outlook across the board for government bonds. We look at primarily treasuries, US treasuries, Malaysia MGS, Indonesia Indo GB, and Singapore SGS. So last month into the rally, we have actually cut all our outlooks, our bullish outlook. We were bullish. We actually cut all the outlooks back to
Okay.
neutral in anticipation of the potential market defensive positioning, which is what we are seeing currently. And we actually, at this juncture, yes, the yield have corrected higher, quite fairly significant for the US, for Indo GB, not so much for Malaysia MGS. But at this juncture, we are still recommending a neutral positionings. We are not adding at this moment. We are not turning bullish until we see a clearer development from the payroll number and the US elections.
I see. And is it just one set of payroll numbers that you are waiting for, or would it be a series of non-farm payrolls that will lead you to change your thoughts about whether this is the right time to come back into ASEAN bonds?
Yeah, that's a good question. Yeah, whether it's going to one data point or a series of data points, we would like to look for more data points, but of course, market tends to react, and the reaction sometimes can be drastic if there is one big shock in a data point. Even if it is just one data point, if there's a big shock, For example, if you look at the non-farm payroll, the September number was up 254,000. Bloomberg median is pointing to 110,000 gain, still a gain for October. So it's quite a sharp deceleration. It's still positive. But the thing is, when we look at the details and the range of the forecast submissions, it's actually very wide. At the lowest end of the forecast, it is actually minus 10,000. And if
Mm.
that is indeed the case, negative print for non-farm payroll, it could be a shock to the market because we have not seen a negative print in non-farm payroll since at least the COVID crisis. So
Okay.
I would actually want to wait for a few more series of data print, but yeah, we are also cautious against any out of the range or out of the entire range of the consensus forecast, the kind of very significant move in a data point. So in short, my view is the risks are actually two-sided. Going into the payroll, there could be both upside and downside surprises. As we have seen throughout the year, the numbers from one month to another, partly because of the seasonal adjustment factors, the actual print in a single month can be very erratic.
Got it. Thanks very much for that, Winston. I'm going to bring in my second speaker right now, Husseini, our tech analyst from Singapore, to talk us through on the technology stocks. As I mentioned earlier, this is going to be a very big week for US tech stocks. Many of these companies will be reporting their earnings beginning as early as Tuesday, tomorrow. So, Husseini, welcome to the show. I'd like to first draw the uh, conversation towards the ASEAN tech names, starting with GoTo,
Sure.
listed in Indonesia. Now,
Mhm.
post the Tokopedia sale to TikTok and GoTo's exit from Vietnam, management has said in the last quarter that it will concentrate on-demand services and the financial business. How are these two businesses progressing? Could you shed some light on this, Hussein?
Sure. Good afternoon, and thanks for having me, Sangyao. Yes, for GoTo, they are progressing well on both sides, which is on-demand services as well as fintech. On-demand services in Indonesia is now a duopoly market, as the gap of top two operators are widening versus number three and number four operators. Some competition is there, no question, from Grab, but we see GoTo is fighting back hard to maintain its market share. So, for instance, in the four-wheeler side, GoTo lowered its fares in third quarter, whereas Grab increased, reflecting their market share resolve.
Hmm.
One of the concern in the market is the potential entry of GSM, which is a new operator called GSM, which is backed by Vingroup of Vietnam, and they have an EV fleet. Okay, so that in our view is a risk for Indonesia, but with for GoTo, with no more e-commerce cash bigger focus on Indonesia, we see them to fight back hard to new competition. On the financial services side, GoTo is expanding from e-wallet services to loan to channeling the loans, which is in our view a higher margin business. So as of first quarter or first half of 24, GoTo distributed IDR 3.5 trillion in consumer lending. And more importantly, with TikTok partnership and TikTok as well integrating GoTo BNPL in their services, in their e-commerce services, we see a much better growth potential and a much longer runway for growth given the under penetration in Indonesia. So net, I'm of the view that with them exiting or them partnering with TikTok on e-commerce side and exiting Vietnam, the resolve on e-commerce side as well as on fintech side has increased and progressing well.
Okay, so it sounds like there is enough of buffer or an offset from the financial services that would take some of the pressures off from the increased competition on the on-demand services.
Uh, See, on the on-demand services at this point, I am of the view that competition is relatively stable. There are uh, uh, some fights, some small battles here or there, but overall competition is stable, and GoTo is maintaining its market share, which is more important. Okay, so at this point, I don't see risk on the on-demand side or competition on the on-demand side. Bit of a concern is entry of new operator. And yes, you are right that if the new operator comes and some competition escalates, I think the growth on the fintech side will be able to cover for that.
Okay, great. Let's talk about Grab. Um, Grab aims to be free cash positive by this fiscal year, 2024.
Mhm.
Are they on track, and what's your take on the risk of Grab not meeting this goal?
Yeah. So the short answer is I see limited risk. I am of the view that yes, Grab should be able to meet its target. So just to take a step back, Grab in fact attained a free cash flow positivity in itself. Okay, first quarter it was negative, but in second quarter they attained a free cash flow positivity of 36 million USD.
Okay.
And as you put it, they are well on track to attain uh, full year free cash flow positivity this year, and the earnings positivity likely next year. So I don't see there is a risk. No question, companies' revenues and GMV are growing while costs are well maintained. So at the same time, the digibank related losses are also improving. So we think decks are clear for company to attain free cash flow positivity and pay or earnings positivity next year. However, our main concern driving our whole call on Grab is the top line momentum. So we expect companies GMV to grow only 12% year on year in third quarter. In our view, this momentum is slow for a growth company, which at this point is loss making as well. And in comparison, when C Limited is another growth company in the region, we are expecting GMV growth of 23% for C Limited.
Mm,
And for Grab, we are expecting 12%. And that's where we are of the view that the Grab's GMV growth is not impressive. Uh, uh, and on top of that, we are of the view that, see, one part is GMV growth. The second part of the revenue driver or earnings driver is the take rate improvement. And for Grab, we also expect take rate improvement to be of limited help because their take rates are already in line with the global average.
I see.
So revenues which are derived out of the GMV growth and take rate increase, we are of the view that revenue growth will grow in line with that of the GMV growth, and GMV growth of 12% in our view is not impressive for us for the so-called growth company, and that drives our whole call on the name.
Got it. Okay. Well, you've touched a little bit about C's e-commerce business. What about its gaming business, which is also very important driver for its stock price?
Yeah, sure. Maybe, Senya, if I can take a 30 seconds to discuss on the Shopee's or C's e-commerce business as well.
Of course.
Yes, the 23% GMV growth is impressive, but at the same, the companies or Shopee's take rates are on the lower side versus the global average. So Grab is in line with the global average, and we see limited room for improvement. But whereas Shopee is below, and there is take rate potential for take rate improvement. And in fact, they are increasing the take rates as well. So for the 9 months of this year, they had increased take rates multiple number of times, and that will reflect in their revenue growth. So we expect GMV growth to be around 23% year on year, 6% quarter on quarter, but we expect revenue growth to be more than 30%. So that is quite helpful. And at the same time, we expect the company to turn adjusted EBITDA positive in this quarter, in the third quarter, from negative last quarter. So those are the positive sides. Now, moving on to the fintech business, I am of the view that fintech business is also doing quite impressive, and which is kind of ahead of expectation, because if you see last year or last year, it was on a declining trend. So late last year, the tide turned, and now it is looking on the growth side. We expect their bookings, the gaming business bookings, to increase 20% year on year and flat quarter on quarter. And the flat quarter on quarter, in our view, is also impressive because third quarter is back to school season. So seasonally it is weak. But despite that softness, we expect them to post a flat booking quarter on quarter, which in our view is quite impressive. So I am of the view that C Limited is firing on all cylinders, whether it is e-commerce, gaming, fintech, and we maintain our or reiterate our buy on the name.
Super. Could you just remind us in terms of the recommendations of these three stocks again? C, as we can conclude, is probably a buy. What about for Grab and GoTo?
So yeah, so for C we are buy, and it is our top pick. GoTo as well we are buy with a target price of 95 rupiah. And for Grab, we are hold on non-consensus hold, I would say. And means as we discussed that I am not very impressed with their GMV growth, which is 12% for a so-called growth company. Some risk, like we discussed, the potential entry of GSM in Indonesia. They are already there in Vietnam. They are looking to enter into Philippines. And to an extent, we also see some risk from TikTok, who is also looking or kind of entered into local services business, which to an extent compete with Grab services.
Okay, great. Thanks so much for that, Husseini.
Sure.
All
Thanks.
right. So that's the take on the ASEAN tech space. We'd like to now go to the US tech side and talk about some of the chart outlooks for these large companies that will be reporting their results this week. So to do that, I have the pleasure of inviting Amirul, our regional chartist, to come and show us actually live on his screens in terms of how these stocks are looking on their technical indicators. So, Amiru, welcome to the show. Could you walk us through some of your observations, please? And maybe as a reminder to our audience, Google will go first tomorrow, and then this will be followed by Meta, uh, and then Amazon and Apple will come in on Thursday. Amiru, can I turn the screen over to you, please?
I think Young, thanks for giving me over the let me share my screen over here. Yes. So basically, there are several big companies, mainly from the Magnificent Seven, that are going to announce their earnings this week. And what I can say before I share my chart over here is that there are several things that I want to highlight over here. So number one, all the five counters that are going to announce their earnings are actually back above all their key moving averages, which means that the bullish trend remain intact in all the counters, in all the five counters. And number two, there are several counters that are actually showing an early bullish reversal move, and there are several counters that are actually showing a bullish continuation move. And number three, except for Apple last week, based on last Friday's session, all the other counters were actually making a gap up move, which means there's like some early buying interest from all these counters. So let's take a look at the charts over here. So the first counter that we have here is Amazon.com. So you can see they just recently made a crossover here, the EMA 30 crossover, the 50-day EMA line. And you can see it is also about to make an important breakout. So if I draw a line up here, and if I draw another line down here, this looks like a triangle imminent breakout. It's not yet making a breakout, but then it is about to make a breakout. But then why I'm drawing this line down here is to show that the uptrend has started, an early uptrend has started from this 5 August low over here. So you can see there's like an higher low structure from this low, and then there's another higher low structure from here. So for Amazon, it looks good because it's above all moving average, and as you can see, also the DMI indicator is showing a fresh uptick. So investor could check out Amazon for this week's earning. So next we have Google. So for Google, it's a little bit different as compared to Amazon because even though it's back above all moving averages, the 50-day EMA is still above the 30-day EMA, if I show you the line over here, which means that the medium, in order for us to confirm that a bullish run is going to take over, the 30-day EMA over here has to cross above the 50-day EMA to show that the bulls are having the upper hand. But then, even though I'm saying that the 50-day EMA is still above the 30-day EMA, we can see that it is about to, the 30-day EMA is about to cross over the 50-day EMA, which is a good sign actually for the counter. And then if I draw a line up here, it's actually on the verge of actually making a inverse head and shoulder breakup. So if I draw a line from here, here, yeah. So it is about to make a bullish breakout if you can take above this line around 169 or 170 US dollar. So if you can take above this line, I believe the 30-day EMA would cross above the 50-day EMA and it would start a new bullish run. Next, we have Microsoft. Microsoft, same case as Google. Even though they are above all moving averages line, the 50-day is still above the 30-day EMA line. But then they are about to converge. I draw a circle line over here, you could see that buying interest has started to come in. So once they converge, I believe a new bullish run could start. But then, in order to confirm a new bullish run, I believe it could break above USD 441 after they announce the earnings. I believe it could actually confirm that uptrend will start soon. And the next one, we have Meta. So as compared to Amazon, Google, and Microsoft, those three are showing an early bullish reversal sign. But then for Meta platforms, the uptrend already started because after they broke above this line, not only they are back above all moving averages, they keep push the price higher. So if I draw a Fibonacci line from this bottom over here, so basically you could see that the price has rebounded from the 38.2 Fibonacci retracement level. So I believe if the price could maintain above this line over here around 562, I believe the bullish line could continue. And the last one, in which I believe this will be my personal best chart setup because it is on the verge of making an ascending triangle breakout. So if I draw a line up here, so and I draw another line down here, this is an ascending triangle pattern. It's still consolidating inside the ascending triangle pattern, but then you can see there's a interesting high-low structure starting from here, and then another one from here, and then you could see that it's also back above all moving averages and the uptrend remains intact. And then you could see a fresh uptick in DMI, and RSI also is still way, way below the overbought levels. So you could see that Apple is showing an interesting chart setup. So if you could take the resistance level around 37 to 37 over here. So I believe the uptrend from the 5 August, oh no, sorry, from the 5 August low down here could continue. So in conclusion, all charts are looking good. So please pick your counter carefully and happy trading. So that's all from me. Yeah.
Thanks, Amirul. So, as Amirul just said, the tech sector, especially the US tech sector, looks very interesting at this moment, especially Apple. It's a very interesting observation here because Apple has just released its beta version of its AI solutions on the iPhone. And it looks like markets are pricing in for some positive feedback from the market. So keep an eye on Apple and keep an eye on the tech stocks. Okay. So with that, we're now coming to a close of the program. Just a reminder of the key macro updates that will be coming over the next few days. On 29th, right through 30th of October. Largely, we will be seeing results from the REIT sector. This will start off from Star Hill Global REITs tomorrow. And on the same day also, we'll be getting Mapletree Industrial Trust, CDL Hospitality Trust. And then on 30th of October, we will get Capital Land, Escort Trust, and then we'll get some industrials like Wilma will be reporting as well. Okay. And last but not least, I'd also like to remind our valued clients here that on 5th of November, we will be organizing a virtual meeting with Capital Land Integrated Commercial Trust. So if you are interested in learning more about this company or have positions in this name, please contact your salesperson so that he or she may be able to sign you up for this virtual event. So with that, we've come to the end of the program. Thank you very much, as usual, for your time to spend with us on a Monday afternoon. Be safe in the stock market. Happy hunting, and we look forward to seeing you again next week. Right? Thank you very much.